Greetings and welcome to my YouTube channel. Please do not forget to subscribe, like, and share. Today, I will be presenting a practical accounting question. The instruction above says for each of the following transactions, indicate in a table form as follows. Like each and every transaction, you need to indicate its source documents, subsidiary journal to be recorded in, account to be debited, and account to be credited. So let's start with transaction number 1. Transaction number 1 says service rendered for 1,000 cash. What is the source document for this? Right here, you as a business, you are rendering a service, like you are selling a service. So whenever businesses sell services or render a service, the source documents they give to their client is original receipt, and then they keep the duplicate. So you're going to record what you keep as the business. So the source document for transaction number 1 is duplicate receipt. Duplicate receipt. Okay. And then with subsidiary journal are we going to record transaction number 1? We're going to record transaction number 1 in the subsidiary journal called cash receipt journal. We call it CRJ. CRJ. Two accounts affected. Two accounts affected for transaction number 1 is bank, because you have rendered a service for cash. Is bank, you debit bank and credit service rendered. Service rendered. Service rendered, right? We debit bank here, right? Because bank is an asset, and whenever there's an increase in cash into the business, we debit, because asset increases on the debit side. Bank is an asset, okay? And then service rendered is an income account. It's an income account. It means we're gonna generate, if we're gonna render more services, it means we'll have more income, more money coming into the business, right? Therefore, whenever there's an increase in incomes, that means credit, because incomes increases on the credit side. Okay. And then let's go to transaction number 2. Transaction number 2 says service rendered for 3,000 on credit. Service rendered 3,000 on credit. Okay. So here you are rendering a service on credit. So you do not receive money for that service, but you have sold a service or you have rendered a service. So whenever you sell on credit, the source document is an invoice, but you need to check whether it's an original invoice or duplicate. As I said, businesses, when they render services or when they sell their products, they keep duplicate and give the clients or the customer original. So when you record transaction number 2, you're going to record the source document for transaction number 2 actually is duplicate invoice. Duplicate invoice. Duplicate invoice, because the original is given to the client. And then the subsidiary journal is debtors journal. Debtors journal. That's where we record transactions that we have sold or rendered a service for on credit. Okay. And then account to be debited is a debtor. So you're gonna go there and say debtors control. Debtors control or debtors. Right. And then account to be credited is service rendered. There we go. Right. Okay. And then let's go to transaction number 3. Oh, okay. Before, a debtor is an asset, right? So whenever it increases, we debit, and then service rendered is an income, as I explained before in transaction number 1. So that's why we are crediting, because service rendered is an income, and whenever we have more incomes, we credit, right? And then transaction number 3, paid for advertising, right? paid for advertising. So you as a business, you have received a service called advertising, right? So whenever you receive a service like that, the advertising company will issue to you an original receipt, okay? Original receipt. Because you are the client at the moment. So you'll receive an original receipt. You receive original receipt, and then the sub-journal or the subsidiary journal for transaction number 3 is cash payment journal, CPJ, because you are making a payment, right? And then account to be debited is advertising. Account to be debited is advertising. Account to be debited is advertising, and then you're gonna credit bank because you're making a payment. Here you're not receiving money, you're making a payment, so your bank is decreasing, your asset is decreasing. You credit. Advertising is an expense. It's an expense, and whenever expenses increases, we debit. Okay, and then let's go to transaction number 4. Transaction number 4, they say you received 2,500 from a debtor. You received money from a debtor. So whenever you receive money from a debtor, the source document will be duplicate receipt. Remember, you as a business, you keep duplicate. So it's going to be duplicate receipt. Duplicate receipt. And then the sub-journal, because you are receiving money, should be cash receipt journal. Okay. And then account to be debited here is going to be bank because you are receiving money. Bank. And then you credit your data. Credit your data or data's control. Data or data's control. Right. Okay. And then let's go to transaction number 5. Transaction number 5, they say buy consumables on credit for 1,500. Buy consumables on credit from buy consumables on credit for 1,500 from Dodgy Dog. Okay. Is it DigiDog? Yeah. And then the source document, when you buy on credit, you are going to receive an original invoice because you are the one who's buying here. You're going to get original invoice. Original invoice. Because you bought on credit. Remember, transaction number 2, you were selling or you were rendering a service on credit. Here you are buying on credit. So you get an original because you are the client at this time. Okay. And then the source document for that is CJ, creditor's journal. We call it CJ, creditor's journal. And then the account to be debited is consumables because you bought consumables, they are increasing, they are your asset. And then you're gonna credit creditors because they are liabilities and they are increasing, and whenever liability increases, we credit. Okay. And then let's go to transaction number 6. Transaction number 6, send damaged consumables back to Daiji to the value of 60 rand. Okay. So the source document when you are returning the goods to your suppliers is original. Original credit note or credit note received. Original credit note. Original credit note, or you can call it credit note received. Okay, and then the subjournal, the subjournal is creditors allowances journal. Okay, creditors allowances journal, and then you're gonna credit creditors. You're gonna credit. I mean, you're gonna debit creditors. You're gonna debit. Sorry, you're gonna debit creditors. Gonna debit creditors because now you are returning the goods to them, therefore they are decreasing. And then you're gonna also reduce your consumables. Your consumables. So when you decrease your asset, you credit. Okay. When you reduce your asset, you credit. Okay. So yeah, consumables should be credited. Okay. And then like it's just the vice versa of transaction number 5, because transaction number 5 you were buying, and then transaction number 6 you are retaining. So that's why now it has to be just the vice versa. Okay. And then transaction number 7, they say pay wages for the week 5,000 by EFT. So the source document here will be EFT. EFT is going to be your source document, and then the subsidiary journal. Subsidiary journal, because you made a payment, is going to be CPJ, your cash payment journal. And then your wages are expenses should be debited. Whenever we have expenses, we debit them, and then we will credit the bank because we are making a payment, and then your money is being decreased, or your bank is decreasing. Okay. Then transaction number 8, pay the rent for the month of 7,000. Okay, pay the rent for the month of 7,000. The source document here will be original receipt because you are the one paying. Original receipt. Original receipt. Okay, and then since you are making a payment, the transaction should be recorded in the cash payment journal because you're making a payment of the rent. And then you're gonna debit your rent expense there, rent expense or rent paid, and then you're gonna credit your bank because your money is being decreased or your bank is decreasing. Okay, and then transaction number 9, the owner took goods, or the owner took consumables, sorry, the owner took consumables for his private use, 100 rand. So the source document there is going to be general voucher. General voucher. General voucher. General voucher. And then the subsidiary general is going to be general. And then we're gonna debit drawings, because drawings, it's an owner's equity account and it's decreasing the owner's equity, and whenever owner's equity decreases, we debit. And then we're gonna credit consumables. They are decreasing because the owner took. So when the owner is taking, is decreasing the stock there or the consumables. All right. And then credit. And then let's go to transaction number 10. Pay 1,000 to DigiDoc for partial payment of the amount owing to them. So now we are making a payment to our suppliers or our creditors. So the source document should be original invoice. No, not original invoice, but original receipt. Original receipt. original receipt, and then the sub-journal, since you are making a payment, will be cash payment journal. The subsidiary journal will be cash payment journal, CPJ, and then your creditors are decreasing because you're paying them, and then you debit because they are liabilities, and whenever liabilities decreases, we debit. Okay, we debit. Whenever liabilities decreases, we debit, and then because we made a payment, our bank or asset is decreasing, we credit. Yes, that's all. Thank you, and thank you for watching. Salute.